This is Nvidia's stock price over the past year. Anyone who bought just $10,000 in Nvidia 5 years ago would now be worth $310,000. But even the most invested Nvidia holders aren't going to expect another 10x from here. So I found the 3 AI stocks that are still small enough to have room to grow while having some pretty convincing reasons why they could double or triple, or one of them could even 15x in the next year. I don't want to waste your time, so these are the 3 stocks I'll be covering in this video, each of which aligns with one of the 3 main biggest areas of the AI tech stack. By better understanding each company's products and not just their books, we can better predict which stocks will outperform the market, since massive growth only happens when a company has the perfect product in a quickly growing market before that market fully matures, like Nvidia. And with this focus on products, I'll be applying my 5 years of experience advising Fortune 500 companies on how to use cloud and AI technologies to give my opinion of each company's products as we go. Starting with a company that competes with Microsoft and Google. Oracle has products for both training new AI models and with helping other companies to use them. These 2 companies have already seen a huge run-up in their stock prices on the back of their AI tech, but Oracle hasn't yet seen the same rise. So Oracle trades on the New York Stock Exchange under the ticker symbol ORCL, and they operate in the middle of the AI tech stack as a cloud provider. So everyone from small app developers to entire enterprises, everyone is now running some of their apps on the cloud because it's often cheaper, more secure, and offers more services than you can run on a server in your back office. So I created an account on Oracle's cloud, and here are some of the services that they can offer that you can only get if you're an Oracle customer. So first, they hook you onto the platform with a bunch of quick starts that you can easily get started with, like deploying a basic WordPress website or getting ready to run some data analytics or develop an app. And if I look at the generative AI services that Oracle has available, the services here are very similar to those being offered by Microsoft or AWS or Google. They have the ability to train custom models by fine-tuning base models that they have in here. You can also create dedicated AI clusters to host your models. And they have a bunch of the features that we see with generative AI. So we have chat, we have generation, summarization, and embedding. So if I open up chat, for example, I can choose between open source models like Meta's Llama 3, but I can also pick from models that aren't necessarily on the other cloud providers like Cohere. Now, Cohere and Oracle actually brought together a partnership to help bring generative AI solutions to enterprises. And I don't think anyone is of the opinion that Cohere is better than GPT-4 or even Google's Gemini. But the point is, Oracle does have exclusive models that people can only get on their platforms. And of course, if you need to change these, you can always create your own model directly on top of Oracle Cloud. Honestly, I would rate Oracle's generative AI the most similar to AWS, where they're not really creating their own custom models as much as they're allowing people to use open source models, which honestly for 90% of users is all they're going to need because the open source models are getting extremely good. But while generative AI has been in the news, for a company like Oracle, they're not going to make a lot of their money in this area. Instead, this is basically the bait to get people onto their platform to start creating generative AI proofs of concept, and then they can upsell them onto where they make the real money, hosting VMs and databases directly on Oracle Cloud. And we can see just how important cloud is to Oracle as a company, honestly more important than the other big hyperscalers. The company's total revenue in Q4 was $14.3 billion, but their cloud revenue specifically was $5.3 billion, up 20% year over year. And their CEO noted how in the last 2 quarters, Oracle signed the largest contracts in their history, driven by the enormous demand for training AI large language models in Oracle Cloud. The cloud computing market is expected to more than double over the next 5 years to $1.44 trillion by 2029, a compound annual growth rate of over 16%. And the generative AI market is expected to reach $1.3 trillion by 2032, a 42% CAGR. But while Oracle Cloud is small compared to AWS or Microsoft Azure, it's still considered a large cloud provider, boasting all of these companies as customers. And every company building AI products, like we'll see later in this video, needs one of these cloud providers to run on. So this stock offers some substantial potential upside when compared to the already very richly valued hyperscalers. But Oracle is still a fairly large company at its current market cap of $390 billion. And while a 5 to 10x is possible here, my second stock in this list is much smaller but has much more potential for growth. And and the sun is starting to come in, so I'm gonna move somewhere else. So Poet Technologies is listed on the NASDAQ under the symbol POET, and they're working in the niche but growing area of AI networking. Their customers are big data centers that run clouds like Oracle's. So let me show you how this company is trying to change the game in a market you might not have seen before. Our entire world is connected by miles and miles of networking, and in recent years, we've moved away from traditional copper wire like you might see in your house, as demands from cloud workloads and decentralized AI processing require crazier and crazier data speeds. But what can move data faster than electricity in a wire? Well, light. Fiber optics can transmit more data per second farther than traditional copper wiring, which is why when a new cloud provider like Oracle moves into a region, making sure they have a robust fiber network in place is priority number one. But with this faster flow of data also comes a whole new set of problems. How do you build fast enough chips to fully utilize them? Well, big companies like Nvidia are hard at work making their chips smarter and more integrated, but you also have to worry about how you even get data from your computer into the fiber wire, because computers speak in electrons, not light. And that's where Poet's field of photonics comes in. If chips use copper wires and networking uses light, there's a middle step where the electricity gets converted to light by a device called a transceiver. Up until now, the transceiver industry hasn't really learned from the chip maker's approach to making integrated chipsets, and instead has separate circuit boards, light filters, waveguides, and detectors, all basically hand-placed onto a board that all take up space and use a lot of energy. Until now. Poet Technologies has invented a new form of waveguide that allows other optical and electronic components to be put onto a single chip. So this turns into this. That means space and energy savings for an industry that is desperately trying to find ways to offset their ever-increasing demands in those areas. But there's a second and maybe even bigger benefit. So I couldn't really try out Poet's products like Oracle since I don't have a data center, but I was able to get on a call with someone from Poet who walked me through the specifics of how these chips work, and I can give a summary of the types of problems this technology solves. So thank you, Poet, for helping me out there. So first off, there are actually two types of devices in a transceiver. There's a receiver to convert the light into an electrical signal, and a transmitter to take electrons and turn them back into light on the way out. And a lot of companies actually mix and match which vendors they buy these from to find the best combination of reliability and cost. But Poet has solved for both use cases, producing transmit and receive chips. So the big secret sauce here is Poet's optical interposer, which is the platform for everything that Poet does. Now, instead of needing to wire together different components by hand, they've taken a leaf out of the big chip makers' books so that they can offer integrated chips manufactured by machines. And this innovation led them to win the AI Breakthrough Award for Best Optical AI Solution in 2024, putting them in good companies with last year's winners from the likes of Palo Alto Networks and Qualcomm. So by combining the electronics and the photonics at the wafer level, Poet drastically reduces the number of components in a transceiver, which means lower labor, assembly costs, and it leads to higher margins for their customers. So here's what the market for this looks like. Their chips right now focus on transceivers operating at 800 gigabits per second, which is where AI-focused data centers are heading now. But soon, as AI demands faster and faster data transfer, they're also looking toward the 1.6 terabit transceivers that their customers will require in the future. Now, this is a bit of a different kind of stock, because while they have great R&D and some initial products, they're only just now starting to work with the big electronics makers like Foxconn and Luxshare to get their chips to customers. And they'll still need their designs to be tested by these manufacturers before they'll agree to make them for their big data centers. So I originally learned about this stock through a ticker symbol U video, and he pointed out that while the tech looks promising, because the stock is so tiny, investing in it is going to be inherently more risky than investing in a big established company like Oracle. The company is not yet profitable, and a lot rides on their designs passing testing at the big manufacturers to step into the big leagues. After all, Foxconn manufactures for the biggest companies on Earth, making this stock a bit of a moonshot. If it goes well, the global optical transceiver market is valued at $13.6 billion, and while realistically no one company will dominate that market. In this space, it's usually a mix of companies and products, but there is a lot of room for a hungry new upstart with a disruptive product to enter the market. A market expected to grow at a compound annual growth rate of 13% over the next 5 years. Now, TSU also pointed out that since the company is mostly spending on R&D, there was some risk that the company might need to raise additional funds by diluting shareholders, which is always kind of a risk with these smaller companies. I do think the risk is somewhat lower today since the company already did another fundraising round and the company has real customers that are designing transceivers using their chips. So their risk of dilution to future shareholders is partially offset by that larger cash position. But I'll be treating this stock as what it is, a highly volatile, risky stock with moonshot potential, and I'll be keeping my investment to under a 1% position in my portfolio. Just enough to keep it on my radar and see how their partnerships and products develop. But now we've hit the first 2 layers of the AI tech stack, let's move to the highest layer, where we get to some of the fun stuff, the AI tools that customers and businesses are directly interacting with and paying for. Okay, I think the sun is gonna let me film here again. So creating a powerful new AI model is great, but like we saw when ChatGPT first launched, it was the product that was built on top of the model that really captured people's imagination. C3 AI trades on the New York Stock Exchange under the ticker AI, which first off, good for them for somehow grabbing that ticker symbol. I'm sure Meta is upset they can't change their name again to AIverse, but C3 builds AI tools for businesses. I really love this company's focus because, like we'll see in a second, they're not trying to be too flashy or get caught in the trap of being the everything AI company. They're really focused on their niche. So this company has a couple different products, but their whole focus is around enterprise AI, where they offer the tools for enterprises to build on top of existing AI models, as well as some pre-built solutions. They actually worked with Shell to digitally transform that company, focusing on how they could help Shell transition to renewable energy in the long term. They had a big contract with US Air Force, increasing aircraft readiness through their AI technologies. Because there's a lot of data involved with an incredibly complex piece of machinery like an aircraft, and C3's AI tools can help companies deal with that. Another big one they had on their website was how they used enterprise data analytics to help Con Edison with their utility servicing. And something that I thought was really cool is C3 AI has partnered with both Google Cloud and AWS to let customers deploy C3's applications directly on a client's own cloud account, with all these pre-built use cases available to them. So many companies that want to move fast or get a leg up on their competition are probably going to use one of these pre-built solutions. But once they actually enter the market, they're also going to want the ability to customize the applications that they deploy. And this is where we start to see the full breadth of C3's AI software. Yes, you can develop applications with them, but they also have a set of development tools that people can use. And with this, it really looks like they're trying to bridge the gap between low code and no code, along with the ability to deeply customize what you're working on by actually working at the code level, which is great at companies because they can have somewhat technical people set these applications up and very technical people also dive in and improve things for them down the line. So there are 3 big pieces of application development that C3 AI accelerates. The first is data models. The company actually has a very deep history with working with data. They were actually more of a kind of a data analytics company before they became an AI company. And so they have a bunch of use case data models that they can use for different industries, almost like a drag and drop for their customers. The second piece they accelerate is UI development, where they have an existing UI framework that looks like it's mostly focused on building dashboards, but that is a big use case for AI development. And then thirdly, they have DevOps, basically how do you build and deploy code extremely quickly. So they have all of that built into their own pipeline management system. But then past the pre-built applications and even past the development layer, some companies will even want the ability to create their own generative AI models. And while it doesn't seem like this is sort of the specialty for C3 AI, they do have some nice libraries that can make it easier for someone who wants to create their own AI model, not just run GPT-4, with some really important features to big enterprises like responsible AI and explainable AI, because a lot of companies don't trust AI unless they can tell you how they got their answer. So what I just love about this company is that they are not trying to be the AI company for everything, which is a mistake mistake I see a lot of other businesses falling into. They are laser focused where they see the biggest need, the B2B AI space, making AI apps for big enterprises and honestly focusing mostly on dashboards. The B2B AI market is currently worth $87 billion, but it's expected to reach $407 billion by 2027, a compound annual growth rate of 47%. That's a good place to be if you're an up-and-coming AI company who's already proven themselves with some massive customers. So don't get me wrong, this is still a small company sitting closer to Poet than Oracle in terms of its market cap, but they're starting to show some pretty impressive numbers by going after the folks who have the big money, big enterprises. They've seen their subscription revenue increase 41% year over year, to where it now makes up 92% of their overall revenue, with 191 new agreements signed during the year, which averages out to a little more than one signed every other day. And the reason why I showed Google Cloud earlier is most of these deals were signed through their partner network. So their total revenue for the year hit $86 million. And while the company is not yet GAAP profitable, they have a healthy cash balance of $750 million. And they were free cash flow positive in their most recent quarter. So they aren't burning through cash reserves. But even beyond the products they have on their website and their current earnings, the real special sauce here is C3 has differentiated experience with big data and predictive analytics from the company's early days as a cloud computing company. And so by merging their expertise with the latest tools in generative AI, they can provide value that customers both think they want, the AI flashiness, and the real value that will make customers stick around, which is solving business problems through a mix of AI and analytics. It's a cool company. I'm waiting to invest until their next quarter earnings to see if their growth is sustainable. But I'm curious if you have other under-the-radar stocks that I should look at. And let me know if you like these shorter, more focused stock breakdowns in addition to the portfolio reviews. And speaking of AI, YouTube's AI crunched the numbers and picked this video as your best bet for what you would enjoy next.